the bonds when it comes to the global markets of Adani Group have been very volatile. In fact, over the last couple of trading sessions, we have seen deep cuts when it comes to the Adani bonds, which are trading globally as well. We have with us Mr. Hemant Mishra, the co-founder and chief investment officer at Scube Fixed Income Fund as well, to help us understand how the entire bond market is dealing with the route that we are seeing in Adani bonds. Thank you so much for joining us, Hemant. Appreciate you being with us on the show today. Well, we have seen a lot of volatility, right, when it comes to the Adani bonds. Could you tell us how the domestic and international bond investors are gauging it? Because there have comments which is coming from Citigroup as well as Credit Suisse Group talking about the fact that they're not accepting the Adani bonds anymore.
Yeah, so thanks for having me on the call. So I'll give you a view from an international bond market point of view, because that's where we operate. And it's important to understand the nature of this market. There are three sets of investors who are active in this. The private banking investors, the funds like us who are more long-term investors, and the hedge funds who take tactical bets. Now, what you spoke about vis-a-vis two banks making a decision that they're not going to offer loans on the back of Adani bonds as collateral. It is largely the private banking clientele who gets hit, and the hedge funds who want to kind of put in a tactical trade on the back of that view. I think that will continue. The banks are likely to revisit their strategy. The banks are likely to go back to the drawing board. And the fact that some of the underlying companies have dropped significantly, and I'm talking about their bond prices, is something that the bank's investment committees have to take cognizance of. So I wouldn't be surprised if some of the banks, as a follow-through to what Credit Suisse and you're telling me Citibank has done, also make a decision that they will not accept Adani bonds as collateral. So if I'm a private banking investor who's put in $1 million, and the way it works is, if somebody puts in $500,000, $500,000 is given by the bank. When the bond is down 25%, which is what Adani Green is down by over the past 10 days, I either pay up incremental margin or I sell that particular bond. What we are seeing is more of the latter.
Right, Hemant. Good afternoon. This is Cheryl also joining in the conversation. And let me talk, you actually alluded to the bonds. So let me talk about that. With the spike in the market volatility and given that there's a plunge in the Adani's dollar bond, would this actually go ahead and increase the refinancing risk for the company or for the group as a whole?
So I'd say it's too early to say that, Cheryl. Because what we're seeing is a tactical reaction. It's almost a mayhem, and markets always overextend themselves on either side. I mean, only a few months ago we were talking about a bond coming out of Adani's stable getting potentially a higher rating than the sovereign. If my memory serves me right, this was October of last year, and look at where we are today. So my sense is there would be a spillover impact. Credit spreads will likely tighten. There's an environment, there's a sentiment of uncertainty and doubt currently amongst investors, which will need to be in some ways, get cleared. Until then, I think it's fair to expect higher credit spreads, particularly in the bond market. And there, I think it's extremely important to distinguish between the bond market and the loan market. If I'm an SBI, I'm sitting across with Adani. The Adani team, I can draw collateral structure that suit me. You can't customize a bond too much. You can customize it till a point, but otherwise it ends up with so many investors that you can't utterly customize it. Which is why I think the bond market investors will remain suspect for some period of time.
Okay, Hemant, we'll let you go on that note. Thank you so much for joining us.